It's Monday, October 6th, 2025. A fresh week, a fresh start. Welcome to your news update on Blip Brief, small but almost everything updated every weekday. Okay, let's dive right into the markets, starting with India. Now, markets here were closed over the weekend, naturally, but looking back at Friday's close, we saw some slight gains.
That's right. The BSE Sensex finished up about 0.3%, and the Nifty 50 gained around 0.2%. Mildly positive, as you say.
But the pre-open signals today, gift Nifty futures are looking pretty flat. Yet when you look across Asia, things are, well, jumping around quite a bit. Nikkei's up sharply.
And that really sets up the core tension for you this morning, this disconnect. You have that mildly positive domestic close on Friday, but underneath that surface, something else is brewing.
Go on. What are you seeing?
Well, look at the foreign portfolio investors, the FPIs. Last week, they piled into Nifty futures with record levels of bearish bets.
Record bearish. Wow. So hold on. If everyone's talking about India's domestic resilience, how do we square that with foreign money making massive bets against the market?
Exactly. That's the struggle, isn't it? The market seems to be holding two contradictory ideas at once. Strong local story, yes. But the foreign capital, it seems seriously spooked.
Spooked by what specifically?
It really comes down to the ongoing worries about the U.S. tariff situation with India. The FPIs seem to be betting that this geopolitical trade friction is going to outweigh the domestic strength, at least in the near term.
And the sheer size of those bets suggests they're pretty convinced.
High conviction is right. They're not just hedging. This looks like a directional bet on external factors causing a pullback.
Okay, let's unpack this domestic versus external tension a bit more. Zooming into corporate India, tech sector's in focus this week, right? TCS results are coming up.
Yeah, all eyes on TCS. And honestly, the expectation across the entire IT outsourcing industry is for a pretty muted Q2, maybe just status quo.
Why so downbeat? Is it just general economic slowdown?
It's a couple of things, really. One, yes, global tech spending is restrained overall. But second, and this is crucial, there are these major delays in IT contract renewals.
Delays. How significant?
We're hearing sources say big contracts are taking an extra 3 to 5 months to get renewed.
3 to 5 months. That's ages in the tech cycle. What's causing that holdup?
It seems to be the AI puzzle. Clients want new AI capabilities integrated, but they're hesitant. They're trying to figure out how to restructure their big existing IT deals to really leverage generative AI properly.
So they're pausing renewals until they have a clearer AI strategy.
Precisely. They don't want to sign massive multi-year checks until they know exactly how AI fits into their future plans. The whole sector's kind of waiting for clarity.
That really captures the macro uncertainty, doesn't it? Meanwhile, the IPO market is giving us almost a perfect split screen on risk appetite.
It really is. You've got the huge Tata Capital IPO opening today. And look at the anchor investors. They poured in significant capital ahead of the public opening. Huge confidence there.
Shows massive institutional belief in a top-tier name like Tata.
Definitely. But then you contrast that with WeWork India. It's day 2 for their IPO.
How's the reception?
Pretty cold, actually. Only 4% subscribed on the first day. And maybe more telling, the gray market premium, the GMP, keeps falling.
Right, the GMP. For listeners, when that starts to drop, it basically signals waning excitement, doesn't it? Less confidence it will list strongly.
Exactly. It's like a pre-listing temperature check. A falling GMP suggests investors are getting nervous about whether it will even list at its issue price, let alone pop higher. So, high confidence in Tata, diminishing confidence in WeWork India. Stark difference.
A very stark snapshot indeed. Okay, let's switch gears globally. Japan is absolutely dominating the headlines out of Asia this morning. Nikkei surged. What was it, 4%?
Solid 4% jump, yeah. And it pulled other Asian markets up too, but Japan was clearly the leader.
And this is all political, tied to the LDP leadership election outcome.
Directly. The victory of Sani Takachi is the catalyst here. It's a fascinating example of politics instantly shifting economic expectation.
Okay, connect the dots for us. Why does her win specifically cause stocks to soar and the currency to tumble?
Because Takaichi is strongly associated with Abenomics, the previous push for really aggressive fiscal stimulus, her win immediately sparks bets that Japan's government is going to open the spending taps again.
More government spending.
Which, crucially, makes it much less likely the Bank of Japan will need to hike interest rates soon to control inflation or anything like that.
I see. So stimulus hopes reduce rate hike fears.
Exactly. And when rate hikes look less likely, the currency tends to weaken. We saw the yen fall quite sharply against the US dollar and the euro this morning.
And a weaker yen helps Japanese exporters, makes their stocks cheaper for foreigners. Bingo. Nikkei rally.
You got it. Billions moving based purely on policy expectations.
Speaking of money moving, let's look at commodities. Gold is on an absolute tear. It broke $3,900 an ounce.
For the first time ever, yeah. It's notched up an incredible 49% gain just this year.
What's driving that? Is it just inflation fears or something else?
This looks like classic safe haven buying. Pure flight to safety. You've got the ongoing U.S. government shutdown creating political uncertainty, plus rising expectations the Federal Reserve will have to cut rates again.
Right. Gold loves uncertainty and the prospect of lower rates.
It absolutely thrives on it. Investors are basically parking cash somewhere they believe will hold its value amid the chaos.
Okay, so that's the safety trade. What about energy? Crude oil also ticked up, gained about 1%. Why, given all the global slowdown talk?
That move is all about OPEC plus 4 Methcas. They met and announced their production increase for November.
Yeah.
And it was smaller than the market was generally bracing for, only an extra 137,000 barrels per day.
So they're deliberately keeping supply tighter than expected.
Seems like it. It signals they're serious about putting a floor under prices, even with potential demand headwinds from the economy. They want to keep prices supported.
And just a quick note for India, Russia's still our #1 supplier for crude, right?
Still number one, yes. That dynamic continues.
And we can't ignore the crypto world in all this. Bitcoin also hit a new record, above $125,000.
It did. Blasted through 125K. It's pretty interesting, isn't it? Seeing gold, the ultimate old-school safe haven, and Bitcoin, the sort of digital anti-establishment asset, both hitting records simultaneously.
What does that tell you?
It suggests a really fragmented market with high conviction in different camps. Gold attracts the traditional risk-off money. Bitcoin is hoovering up the high-risk speculative capital, maybe also benefiting from perceived regulatory progress in some areas.
But maybe both signal a sort of underlying lack of faith in traditional currencies or stability.
That's certainly a possible interpretation, yeah. A search for alternatives, perhaps.
Okay, let's bring it back to India, the geopolitical angle. We keep hearing this dual narrative. On one hand, strong domestic optimism, the OECD advisor saying growth prospects are bright despite U.S. tariffs.
Right. The underlying potential is still seen as very strong.
But then you have the External Affairs Minister, Jay Shankar, being quite blunt, saying there's no landing ground yet for a trade deal with Washington.
And that's the crux of it. That U.S. relationship remains tricky. Difficult to find common ground right now. But there's an interesting side effect here.
Which is?
This friction with the U.S. is actually pushing India, maybe even forcing it, to speed up diversification of its trade relationships. And longer term, that could make the economy more robust.
Are we seeing signs of that diversification happening now?
Definitely. Look, today, talks on the free trade agreement with the EU are resuming, and reports suggest the trade deal with Qatar might get finalized this very week.
Yeah, so actively strengthening ties elsewhere.
Yes. And you have bodies like the AIIB and the ADB basically advising India, focus on boosting your own competitiveness, deepen ties within the region. That's your best shield against U.S. tariff impacts, external pressure driving internal reform.
And we're seeing confidence domestically translate into big investment plans, too. Vedanta, led by Anil Agarwal, they're planning a massive investment in aluminum.
Huge. We're talking Rs 13,226 crore to boost their aluminum capacity by 30%.
30%. That's substantial.
It really is. Taking production from 2.4 million tons per annum, MTPA, up to 3.1 MTPA by fiscal 28. That's not just tinkering. That's a major long-term bet on India's manufacturing future and becoming a global player in aluminum.
Shows real fundamental confidence. And speaking of infrastructure bets, BSNL is planning a rapid 5G upgrade.
Yeah, the plan is apparently to upgrade all their existing 4G towers to 5G within the next 6 to 8 months.
6 to 8 months. That sounds incredibly ambitious for a state-run company.
It does, but it highlights the urgency, the need to modernize that critical communication backbone for the whole country's competitiveness, closing the digital gap.
Okay, that leads us nicely into our final segment today, a big leap in science and tech with potential health implications. It involves semaglutide. That's the compound in those popular weight loss drugs, right?
That's the one. There's new research out from the STEP-UP trials, and they tested something quite different.
What was different?
The dosage. They used a much higher dose, 7.2 milligrams. The currently approved maximum dose is only 2.4 milligrams, so this is 3 times higher.
Wow, 3 times the dose. What impact did that have?
A pretty dramatic one, actually. It seems to redefine the potential effectiveness of this whole class of drugs. Nearly half the participants, 49% to be exact, who got the higher dose lost 20% or more of their body weight.
20%. Why is that specific number, 20%, such a big deal?
Because historically, getting 20% weight loss usually required something like bariatric surgery. These medications were typically getting people maybe 10%, perhaps 15% weight loss, which is still good, but
But 20% pushes it into a different league.
exactly. It puts this pharmacotherapy, this medication approach, almost on par with surgical outcomes for a significant number of patients. If you can achieve that kind of weight loss with just a drug, well, it could potentially revolutionize how we treat obesity globally.
From a helpful tool to potentially a true game changer against a major public health crisis.
That's the potential, yes. A very significant development to watch.
Absolutely. A huge medical advance to cap off a really packed Monday brief. From record bearish bets impacting the Nifty to new hopes in fighting obesity, looks like another busy week ahead.
Indeed. Plenty to track. You've got your update, now go make those informed decisions.
And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.